Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day. Good morning, everybody. Welcome to this Wednesday edition of Benzinga's PreMarket Prep. Spencer Israel, Dennis Dick with you this morning with a guest host, Steve Big Beat Orr. We'll get to him in a minute. A lot to get to on today's show between the earnings, between the congressional testimonies yesterday for Facebook, and other companies, between Amazon settling one lawsuit and then getting another one with the EU. We have some interesting headline out of the UK. They are banning energy drink sales to kids. We'll talk about that. Talk about the banks. Talk about the ratings. Goldman is bearish. Jeans. Credit Suisse with the pair trade on China. A pot note out. Interesting. There isn't a ton of analyst coverage on cannabis stocks, so we'll talk about that. And our guest today, Kenny Polcari, managing principal at Butcher Joseph Asset Management and CNBC analyst. Dennis, good morning.
What's going on? Talk to me.
Well, I've got you, and then I also want to introduce to my left here on the screen, actually in life and on the screen, Steve Big Beat Orr, Senior Vice President at Benzinga. He's not normally in our office. He's normally working from home in Florida, but he's with us this week, and he's with us this morning. Thanks for coming on, Steve.
Thanks, guys. Really enjoy pre-market prep. I think it's very important that you start the day with pre-market prep, and you guys.
If you are a pro user, you have very likely heard Steve's voice at some point in the past few months. What do? You squawk for us. You do our webinars. You talk to clients left and right.
Yes.
Yep. You're on our social.
I'm with everything that goes on with Benzinga Pro in regards to pro as well as the social media as well.
Excellent.
That's the man behind the scenes.
Pull back the curtain, right? The Wizard of Oz.
This is it. Yeah, right there.
That's him. But look at that.
And you know what else? Big Beat's also a trader too, though, and he's got a long trading background. Tell us about your trading background, because you've been in the markets for a lot of years.
That's right. I've been trading for about 28 years. I started very young, back in Southern Illinois and Kentucky in the commodities markets, and I moved up kind of did my Series 3 and did all those kind of fun things all the way up to trading stocks and options, obviously now, but took some detours in politics. But the whole time I have been in trading.
So the idea is, due to that background, you're talking with a lot of our clients, and you're helping them, and you're talking them through not just how to use the platform, but how to trade with it.
Yep.
Right. Okay.
Yep. I think two things. I mean, obviously the psychology of trading is very important. I can tell, Dennis can tell you how important it is to have the right mindset, I guess. And a lot of people come into trading and they don't quite have that right mindset. They're not really prepared for it. And the second thing is, when you're in the market, it's different than paper trading, right, Dennis? You've got to be ready to go.
Completely different.
Yeah. You can talk about your trades and how well you did, but when it comes down to brass tacks, you need to be able to make sure that the money's behind it.
It's just all the psychological behavior that happens once you have real money in there. And like I've been saying, with the way the brokerage industry has moved here, with Webull, with you can trade so cheap here now if you're learning to trade. There's no reason to paper trade anymore. Back in the 80s, when you had to pay $200 commissions for a trade, it made sense. Even in the 90s, it was $100 a trade, until really the internet came in and has brought it down. And now you can have free trading on a lot of different platforms. Why not open one of those accounts, get your feet wet with real money? When you've got commission-free trading, you can throw $100 on something, and it feels different as opposed to writing it down. You have slippage involved. You have so many other factors involved, and the psychological factors of playing with real money. It's a big difference. So
no more brokers with three-piece
suits account and go from there.
No more brokers with three-piece suits, right?
That's it. And obviously, the industry's changed a lot over the course of the last 25 years. So Steve, it's going to continue to evolve.
Steve, how'd you get the nickname Big Beat?
Oh, that's a very interesting question. Thanks for asking. One time I was on the air, and Apple earnings were coming out, and I cursed on the air. I said, "Oh, heck something else. Apple had a big beat, and I was very embarrassed. I thought that that would be the end of me in my trading world, and nothing could have been wrong. I mean, that nickname has stuck with me ever since. It's been about 10 years now.
Big beat. So big beat. What do you think of these markets? Because we have obviously trading near all-time highs. It seems like every time we get a 1% dip, people jump into these markets. You've been in the markets for 25 years, so you've went through some significant pullback, some real bear markets. Think about the tech bubble burst, think about the financial crisis. How are these markets different, and do you see this bull market continuing?
Bull market continuing? No. I would say the things that I find that are different are a lot of the new traders coming into the market now with the Robinhood and the Webull, as you were mentioning, hasn't seen a pullback in the market, and all they know is go, buy. And I think at some point they're going to have to, they're going to have to sell. At some point, you're going to take a profit, as I always say. Yes, I don't find the earnings to be as good as we expected. And what's very interesting.
Well, we just started.
Yeah, we did just start, but the banks are first, right? And the banks are beating, but not beating very much. And I think we said it earlier today. I think trading revenue has been pretty light
from trading.
Yeah.
Well, let's break down Bank of America's report here this morning, because they did report here just about an hour ago, and the stock is trading in the red. It kind of chopped around a lot of the report here, but really going nowhere. Spencer, Israel, break it down from the pro.
All right, Q2 EPS 74 cents versus a 71-cent estimate. Sales 23.1 versus $23.23 billion. So the headline is a EPS beat and a sales miss for the quarter. And I think equity revenues were down 13%.
Big beat. What do you think? What do you think? We've obviously saw Citigroup. It rallied significantly in the pre-market report, sold it off. Goldman rallied significantly, sold a lot of it off. JP Morgan did the opposite, sold off on its earnings and then rallied. It's kind of been like the fade trade, unless you're Wells Fargo, which just went straight down. But it's kind of been, the fade trade's been working here a little bit. There isn't really a move to fade here in Bank of America this morning because it's flat. So traders are scratching their heads. They don't know which way to go.
I think two things we need to look at. First of all, I think we need to look at the regional banks first. Are they going to be able to do the same thing that the bigger banks are doing? Because they don't have the same revenue streams that the bigger banks have. So, if JP Morgan can pull it out and have a big beat here, shall we say, that's good. But you can't keep buying the dip every single time. I think we're putting a top in here.
And we did have a bunch of regionals report here this morning. Like you said, the business model is slightly different there. They don't have as much trading presence. Obviously, more real banks as opposed to the banks, the bigger ones being into everything. And think about the investment banking, arm, think about, the trading arm, think about all that. So the regionals are different. We're seeing beats and we're seeing mixed markets this morning from them. We've had PNC trading up. We've got USB just kind of trading flat. We've got CMA trading down. And we also had reporting. Who did I miss, Spencer? There was somebody else in there. Oh, BK. BK is trading up.
BK, PNC, and CMA are sort of the big three regionals reporting this morning.
Yeah.
Comerica, well, actually here, the Bank of New York, let's get that right.
Let's go BK.
BK was mixed. They beat on their EPS, missed on their sales. PNC beat, and Comerica missed. So that's the story. So really mixed from the regionals here.
I mean, for the regionals, I look at KRE, which is the ETF, the regional banking ETF, and it looks pretty flat.
I mean, the banks, even as a whole, and there's bulls bear debates going on here, but even look at the KRE over the course of the last couple of years. We're the same spot we were in 2017, so we've chopped around a lot, but we've kind of just been hanging around $52. So, you go back to 2017 when we had the big move up after, and actually in 2016 when we got the Trump bump on everything. You can see the big move in KRE going from 42 to 53. That was obviously, off of the Trump bump. And now you look here and it's just kind of meandering over the course of the last couple of years. But if you are a pattern trader, when I look at this monthly, and I haven't looked at KRE in a long time, kind of looks like a head and shoulders.
Yep, sure does. And I think another thing we need to look at from KRE is M&A. I do see a lot of M&A in the regional banking area. I think the bigger banks are going to start gobbling up those small banks.
That can happen. We haven't seen a lot of M&A. We've seen some smaller ones go with some smaller ones. We haven't seen the big ones coming up and scooping up some of these. So, that would actually be a spark for the sector if that started to happen. just going back to the Bank of America chart, looking at the big banks here, they look a little bit different, but again, the same story, really, when you look out to the monthlies. Okay, Bank of America back 2017 was 62, or sorry, Citigroup was looking up, but Bank of America was 26 bucks, it's $28 here today. JP Morgan, which has been best of breed, is still up near its highs. So you have seen an outperformance, it looks like, in big banks versus the regionals, but maybe there could also be a catch-up trade here.
All right, let's get to the other earnings.
Sure.
There's a bunch of them. Let's start with CSX here from yesterday. I was watching on a 1 minute at the close, and it kind of fell through the floor here. So the CSX earnings from yesterday, Q2 EPS $1.08 versus $1.11 estimate. Sales 3.06 versus $3.14 billion. So a miss and a miss on the headline numbers for CSX.
Down 6% in the pre-market. Stock that obviously got a pop there. We had CP's earnings the day before, which were good. Right. So that was helping some of the rails going into the CSX report. Maybe they're the victim of reporting second. So the bar gets raised a little bit because of CP, and obviously they don't pass that bar, and now the stock's getting hit pretty hard. What I will say is you got those lows in May, and a lot of people are looking to scoop up stocks back in the low in May. So you get down there near that 73.20 area, which we are just bouncing off of right now. It's been down there at 73.50. I think you probably have some shorts maybe bringing it in, and maybe some buy the dippers lurking. Stock overall has been pretty much in an uptrend since 2018, so transports have been good. So it does pass that test. We always say buy stocks that are in uptrends on dips. You're getting that on CSX. I usually like to wait a couple days until the dust settles to see how significant the dip's going to be on these earnings. But what do you think of the rails there, Big Beat?
Well, I think you got to move stuff around, right? And if it's not trucking, then it's got to be the rails. So I will say that if we do break the 74 here, the range here that you said back in May, it could go all the way back to 68 we had back in December. So we need to see some holding here. Two things: if things aren't moving around the country, people aren't buying things. So we need to make sure that the transportations are still running around.
And I was reading that Dow Theory hasn't yet. I guess this would be an argument for you, Big B. But the Dow Theory hasn't caught up to this bull market yet, right?
I 100% agree.
All right.
Yeah, the transports have been lagging. Obviously, they got helped a little bit, 2 days ago.
I've been around 28 years, so it's always the transports, right? Follow the transports.
I mean, you can argue, too, the economy is evolving to a certain extent, so I'm not sure how much Dow Theory applies in 2019 as it did 50 years ago. So, some of these, theories are
and of course, with Amazon building their own fleet of airlines, I can get that, and FedEx obviously slipping a bit here. But, rails are still cheap. There's still a cheap way to get things around as well as trucking. So I can see that.
And we do have sympathy moves here on the CSX earnings. So if you're looking, all of your rails are trading down here this morning. Norfolk Southern, NSC is trading down about $7 on this report, which is a pretty significant sympathy move. Usually I think about a sympathy move being about a third of, it depends on the sector as well. Like a FedEx, UPS moves together a little bit better. But usually when you get a rail that has the earnings down 6-7%, you'll see sympathy moves of a couple percent. We're seeing more than that this morning in NSC, though. It's trading down 3.5%, down $7. UNP is another one. It's trading down 2.6% in the pre-market. So, even yesterday, CP, which had good earnings, is trading down $4 in sympathy here. It's a light market, though, so a lot of things can change here. Another company in Canada, CNI, is another rail. It's going to be down because it's offered down $2 in the pre-market. So maybe some of these other rails are scoops on the CSX week report. I mean, CP was breaking out, comes back to that 240 area. Maybe this is a chance to get back in on a stock that actually had a pretty good report.
Would you wait until the retail sales numbers come out?
I don't, it's difficult to buy any stocks, when you've got a negative catalyst for the whole sector being CSX. But my argument just being, I think CP already reported, so we don't have to worry that, hey, these CP earnings might be bad. Usually when you see sympathy.
Now it's time to buy the dip.
Yeah, I think it could be a stock like CP. If CP got down to 240 or 242, I think I'm more interested in that one than some of the other ones, because the other ones still have to report. I mean, NSC earnings are still coming. So, now that CSX, we already know the CP earnings. So I often say, usually the stocks I've already reported are going to have less of a sympathy move because there is no expectations for them this quarter. We already know what the stocks were. whereas stocks that are due to report might have more because, oh, CSX missed, so maybe UNP is going to miss, maybe NSC is going to miss. We already know that CP beat. So that's why I'd be more inclined to buy a CP on the dip as opposed to an NSC or a UNP. I don't know if I'm buying any of them, but if I had to buy a rail, I think it'd be CP.
So in my mind, the biggest difference there is Canadian versus US.
Well, that's something to consider too. And maybe it's because I'm Canadian that I'm biased to buy CP. But, yeah, there's something to consider there too. I mean, well, how's the economies, different there? Obviously, they're transporting different stuff because of the way they're based. But, Canadian Pacific's all around the world there too. So not just specific to Canada, but obviously the big major rail in Canada is going to be Canadian Pacific and CNR.
All right, from transporting goods to transporting people, UAL had earnings yesterday. Congratulations to them for the first big buyback of the earnings season, excluding the banks with the stress test results. But UAL announced a buyback of 3 billion shares. Sorry, $3 billion. What am I saying? 3 billion shares. $3 billion yesterday on top of their earnings report, which was a beat and a beat across the board. Plus, they raised the low end of their fiscal year EPS guidance. So a guidance beat, an earnings beat, and a $3 billion buyback for UAL.
The stock popped big time on the initial report. I think it got over $96 if my memory serves me correctly. Spencer can check that out from the after hours chart there last night. It has given it back, and you might be saying, well, why? Why did this give it back? The stock has been going straight up, and even into the earnings report, it was going straight up. So the expectations were very high, obviously, on this stock because the stock price was up straight into it. So it's leaked it a bit. It is still holding on to slight gains here. I mean, it was a really good report, so I don't think I'm coming in and shorting it just because it's a good report. But if it was to go red, it would be concerning. It's going to be interesting to see how this trades at 9:30 if they come in and buy this after-hours dip because we have given back most of the gains. It was a pretty good report. It is a stock that is in favor right now. A lot of the airlines are in favor here right now. They've been moving up here over the course of the last month. Delta Air has been really flying. If you want to talk about one that's been going back in June, at the beginning of June it was 52. It's now $63. So huge move for that one as well. The airlines are definitely in favor. A big beat. What is your thoughts on this sector?
Couple things. United Airlines, well done there. I can see why $96 back in November the 26th. The high there was 96.46. So the 96 seems to be like a topping level here. I fly out just like you, Dennis. I fly all over the world, and every time I'm on an airplane or an airlines, it's packed. And they're not selling peanuts anymore. They're trying to sell liquor and trying to stop as many people as they can on those airlines. So well done them. And moving people around has been the key right now. So yeah, I think I can see it going a little higher here actually with airlines.
I don't know if Dennis leaves his basement too much. So
yeah, no, it's true actually.
I'm kind of jealous, Dennis.
I'm like a hamster. I got my little hamster wheel, and I don't get out of the cage. I don't really know too much of what's going on in the real world other than just reading the news. Is it hot outside? Is it cold outside? I don't really know sometimes.
Everyone should experience flying in the middle seat of a contemporary major aircraft just once a year, because it humbles you. It humbles you because you're like a sardine in there. It's very humbling. But
I'm too big for that. Right. No way.
All right, UAL, and you mentioned Delta. Dennis, the other airline is moving off this headline or off this report.
Yeah, you're breaking up there a little bit, Spencer. DAL has been hot. I mean, all of the airlines really have been hot here. We're going to get a few more of these reporting, though, soon, are we not, Spencer? When's Delta's report?
Let's look it up in Pro. Delta is, actually, wait a minute. Oh, aren't they super? Oh, they're out.
They already came out?
Delta was out last week. Yeah.
This is the honey badger memory in me.
They were like the first one. They're out.
Okay, so I already heard from Delta.
Before the
who's due to come out still? American? Did they come out yet?
Good question. They are not out yet. If I recall, they're a little later. Yeah, they're always a little later. They're at the end of the month. Looking at like JetBlue.
You know who's been lagging? Just when I'm looking at the charts, really, Spirit Air hasn't participated in this rally nearly as much as some of the other ones.
Save is the 24th. JetBlue, I believe, the 23rd.
Yeah.
Who are we missing here? Southwest. When's Southwest at?
They've been lagging a bit too.
LUV. So they're all in the week of the 23rd, 24th, 25th.
I mean, you start breaking this down, and you look at the deltas and you look at the UALs, and these stocks are, really doing well. And then you have, Southwest. Maybe it's a little bit more conservative. They hedge their oil. They're a little more conservative run airline. But really, it's lagged. And also Spirit Air has lagged as well. And Spirit Air had a really good end of 2018. Maybe it just got overdone, and the other ones are playing catch up here now. But it's interesting we start to see separation within the group. And Delta and UAL have both been the leaders.
And with JetBlue, the last 2 quarters have been big surprises. The first one being 16% and 33% surprise to the upside last quarter. So that's right. They maybe are breaking apart.
JetBlue at 20, that's a big number for it. If we just go back and look at the monthlies there, multiple times we've tried to break out over 20. We can't seem to do it. It's a big psychological hurdle for the stock. So maybe the earnings are going to be the thing that propels it over. But until it gets over 20, I think you still have bears in control of this one.
Yep, 17 to 20 it seems to be the trading range.
Yeah, that's a trade range. Sometimes those ranges work for a long period of time. If you can identify them early, you can make money trading the range.
That's right.
All right, let's go to the biggest loser of the day on my movers filter, and that is Nu Skin. NUS.
Yikes.
They cut their guidance yesterday. It didn't seem like it was the most dramatic of cuts, but guidance cuts never good news. So they cut their guidance. This is at like 5 o'clock yesterday. They cut their sales guidance for the year. The low end of the estimate was $2.76 billion. Now it's $2.46 billion for the fiscal year sales. The Q2 EPS was lowered by 10 cents there, 94 cents to 84 cents. So a guidance cut mostly due to their outlook in China. Not the biggest of cuts we've seen, but a guidance cut is a guidance cut.
And the stock's getting hit really hard on it. It's down 20% here, and it was a very significant guidance cut. It's a stock that's been in a downtrend basically for the last year and a half. Got up to over $80, $88 back 1 year ago on August of 2018. Now $37. So this is more than a 2-for-1 stock split now, except you didn't get any other shares. Expect Herbalife to be weak on this. HLF already trading down. USNA is another peer. Expect it to be a little bit weaker on it as well, although USNA already got hit. So, maybe you could have predicted this NUS with the USNA. And I think it was back, just about a week and a half ago where USNA disappointed and got hit pretty hard. So if you were using that as a tell, you're getting rewarded here this morning with NUS.
All right, moving on. There's a lot of news to get to. I want to talk about Qualcomm here because this is weird. So if you've not been following the story, the Federal Trade Commission won a suit against Qualcomm, an antitrust suit, like 2 months ago.
Yeah.
Qualcomm came out and asked the judge to delay the ruling. Now the Department of Justice has come out and agreed with Qualcomm. They've asked the judge to delay the ruling. We have our federal agencies fighting with each other. The FTC just won a case. The DOJ is out saying, yes, we agree. We agree with Qualcomm. Delay this ruling now. It makes no sense.
And you know what? Delaying the ruling is a lot different than winning the ruling. And, here we are. We're trading up 4 points on this. In my opinion, it's a gift. I sold Qualcomm the last time on this pop that we had some positive headlines about this. It's headline driven here right now. This ruling means a lot. I mean, we obviously saw it get really whacked, the stock. If you go back in May when the stock fell from 75 down to like $66, and then it got most of it back. You're back up here again. Back in the 80s, I just, I worry that the next headline isn't going to be positive. So it's hard to trade something technical when there's so many headlines. I mean, we've talked about this with Boeing for a while. Qualcomm has become a headline stock here too. It depends on what is going to be the next headline coming about this ruling. And we've had multiple headlines in the last couple of months. I mean, there's probably going to be another one coming here again. So I think the pop this morning is a gift.
I mean, I like the Qualcomm Snapdragon chipset. I mean, I think it depends on the sales of, phones for the next quarter, actually, with Apple. Are they going to continue there? Because I feel like Apple and Qualcomm have been fighting forever. So there's too many news out there for Qualcomm. I think we should leave it alone.
I'm leaving it alone here too. You just don't know what the next headline's going to be. So I know we've had Sean Udall. He's applauding the move because he's still long, and he was obviously in from the 50s. So it was a good call by Sean on our show. I was in it a couple of times. I made money the first time around. I lost a little bit the second time around. From a swing trading perspective, I'm out on it right now. Just too many headlines driving the stock, and you don't know what the next headline's going to be.
Are there any peer stocks that you would look at?
I mean, all the chips, and this is a good segue here because all the chips are up here this morning. And if you think it's Qualcomm driving, it is not. The chip stocks are trading up because of ASML. Yep. ASML is getting a nice lift overseas here this morning. It's trading up $11. I don't know if you have those numbers there in front of you there, but it is driving all the chips up here this morning. SMH is trading up over $1, which has a chunk of Qualcomm in it, but NVIDIA is trading up $1. Applied Materials is trading up. Lam Research is trading up. I believe ASML is a catalyst here.
Right. Yep. It was their EPS actually missed, but their sales beat by enough, and their quarter-over-quarter gross margins increase was good enough. So ASML overseas, like you mentioned, and so it's been trading there, and it's up. It's actually beating the Ericsson. Ericsson also had earnings. They're also overseas, and they're down, but the ASML report is good enough, I think, to overcome the Ericsson report.
You just wonder. We had a bad day in the chips yesterday. So now you get a couple positive headlines that are bringing us back up. Is that, your chance to get out again on some of these chips? Because even if you look like a Micron, for instance, and Micron's not participating really here this morning, it's only up 15 cents. But if you just look at, the other examples here I'm trying to look at here, well, NVIDIA.
Right. Are there any subsectors within the chipsets, like, say, for example, gaming as opposed to phones that you would look at?
I mean, I don't know how much the gaming stocks have their own issues here right now. EA came out with a bad headline there yesterday, which was something, and it's these games that drive these prices.
And I'm a gamer, but I've been playing Apex, and season 2 didn't look too good.
Yeah, well, EA had a negative headline. What was the headline yesterday on EA, Spencer? There was something that drove it down $4 yesterday. I've already forgotten.
It was the
headlines kind of are meaningless.
Come on. Yeah,
see the direction of the move.
There was a couple headlines. One of them was that they ended their partnership with a European soccer team. The other one was Piper saying that the video game viewing data is most favorable for Activision, not EA. But
I was trying to grab. I saw another headline there too. Oh yeah, EA. I'm just grabbing it here too.
Lows here for a year, so
it was EA. Let's see. I don't follow closely, but EA announces. I don't even know how you replace Juventus and FIFA.
Juventus, that's what I said. They ended the partnership with.
Yeah. So that's it. So that was kind of the headline.
You have to know European football, Dennis, to keep up with the.
Yeah, I know. I just got to watch more European football. There you go. I don't even watch Canadian football.
Is it Canada and Europe?
CFL down in Windsor is really,
right?
No, wrong football.
It's the Rouge that gets you in the CFL. I mean, come on, you get an extra point for kicking into the end zone. It's ridiculous. Anyway, so don't get me going ranting on football.
While we're on the topic of gaming, though, there is going to be an IPO today in the sector. DoYu International, DOYU, supposed to IPO in the $11.50 range.
That's today?
That's today.
What is that?
They are a Chinese video streaming service backed by Tencent.
Oh, it's a 10 cents, like I don't know for 10-cent play.
An IPOing on the Nasdaq, 1150 is the IPO price, so probably open above that.
What's the symbol going to be?
DOYU.
DOYU.
That's what it is.
Okay, so at 1150.
What?
And the symbol for 10 cent. TCEHY.
Yeah,
it's hard because it's traded as an ADR over here.
It's OTC, so it's TCEHY. I'm sure there's a few straight classes of it, but TCEHY being the most active, but I don't know how much it trades in the US. 8:29, Dennis. We have imbalances in a minute.
Yeah, 45 seconds.
Oh, we forgot about Abbott Labs. You want to do that one?
Yeah, do it quick.
ABT Q2 just EPS beat 82 cents versus 80 cents. Sales missed 7.98 versus $8 billion for the Q2 earnings, mixed there. Q3 EPS guidance was in line. Fiscal year EPS guidance was in line. So fine report from Abbott Labs.
And just consider this, though, is that the pharmaceuticals, the big pharma, fell out of favor there last week. So now you get a pop back up. Maybe you're potentially going to test a high there at 85.90. I don't know if you're going to get that high on Abbott Labs. I think the rally gets faded. So my opinion, Abbott Labs, and I actually own Abbott Labs in the long-term portfolio. I'm not selling it out of my long-term portfolio. I've had it in there for a decade. But as a trade, I think this rally could get faded here just because Big Pharma was out of favor. You get a pop up on an okay earnings report. People are buying here this morning because the headline number's up. But that being said, I think there's just the stock is more out of favor than it was. The whole sector's out of favor. So I think that could put some pressure on it. I mean, Merck has come back a little bit from its lows there 3-4 days ago, but if you look, there was some ugly moves in pharma here over the course of the last week, and Abbott Labs was down slightly as well. You get a pop back up. I think there's willing sellers.
It's all M&A. I feel like everything in this space has been M&A driven all year. The people that have been playing it have been playing it for the M&A. But I don't know.
I mean, but they're the big ones. So is Abbott Labs getting acquired? No, they're probably going to be the acquirer, and it seems like the big one gets hit. So if you're playing Abbott Labs from an M&A perspective, you'd be shorting it. Because if you think there's going to be, big pharma buying up more companies, we saw what happened with AbbVie. AbbVie was obviously a spinoff of Abbott Labs 7 years ago. So, when they went out and bought Allergan, the stock got hit really hard. Abbott Labs would probably be an acquirer, not an acquiree. So if they come in and buy somebody smaller, the stock could actually get hit too. It's another reason to talk against my book here because I own Abbott in the longer term portfolio. But I wouldn't be buying Abbott Labs up here. Not just my opinion.
A31, Dennis, any notable imbalances?
Well, GE, of course, 199,000 to sell GE every single day like clockwork. There's a sell balance in that stock. Goldman Sachs, 35,000 to sell. We do have Bank of America still trading in the same spot, just meandering there. Wells Fargo, which had a pretty bad earnings report, has 35,000 to buy here this morning. I'm not really seeing a ton jump out at me here. Square's been trading down all morning. It's got 12,000 to sell. They're small. Again, we're seeing institutions hold their orders pretty close to their best.
All right. We got a couple minutes before we're going to grab our guest today.
Can we talk Tesla?
Can we talk Tesla?
Yeah, because it's got a couple positive notes here again this morning.
Oh, did they?
Yeah, there's just no rating change here, but I saw positive commentary from a couple, and I can't remember from who here. I don't know if you have it on here, if you can just quickly search it in the Pro, but there was some positive commentary with Tesla here again this morning. Stock is trading up $4. I did write those puts yesterday on the pullback when it got to the 247, 248. I wrote the long-term puts. I talked about this strategy. Just in my opinion, I don't believe the Tesla is going to go bankrupt like a lot of people believe. We've had Mark Usgrave on our show saying it's a zero. I'm taking the opposite opinion of that, where I believe if it went low enough that it would get acquired. So I wrote the 120 puts. So talking, and I went 2 years out. So I went out to June, and I wrote the 120 puts, and I got almost $20 for it. I think it was like $19.88 or something. So basically, that would put my cost basis on Tesla if I was to get obviously executed. It would be at $100. So the setup is you make 20 points. If it goes bankrupt, I lose obviously 100 points. So you don't want that to happen. But I don't believe it's going to happen, and that's why I'm just playing the non-bankruptcy trade here. I think if it got in the low hundreds, I think somebody would do a hostile bid for it because the technology is that good. So this is called the non-bankruptcy trade, and that's why I wrote the puts. A couple years out, we'll see what happens. Obviously, very long-term trade on that one.
Do you have an opinion on Tesla? Everyone's got an opinion on Tesla.
Everyone.
You must have one.
I think Tesla with Elon Musk at the helm is a little tough. I think that's probably why Dennis is looking at that way. He's absolutely right. The technology within the car, we drove it ourselves. It's cool to talk to your car and it drives you and puts you, parks it for you. But at the same time, he's not a car maker. And the cars aren't selling as well as he thinks they are. And he's kind of had to be the snake oil salesman for a while. So, yeah, I think Dennis is right on target with 120 in the puts here. I think it could even go even lower than that.
Well, I wrote the puts, so I'm saying it's not going to go lower than that. So I'm actually going to be the opposite.
So we're at the 120 then, right?
Yeah, I wrote the 120 saying I don't believe it's going bankrupt. So, and obviously if it got down to 50, I would still lose on that trade. I think at a price low enough, there would be, and everybody will say, well, Elon Musk would never sell. That's what they're going to say. But at a certain point in time, if it got really ugly and the stock got, started getting hit, fall 50% for these prices, I think there's, big auto that would be willing to scoop it up just for the technology. And Elon Musk at a certain point, if he's burning cash, I think would, have to obviously look at all options.
Everybody has a number. Elon has a number as well when he wants to get out. The thing about Elon is he has other things that he wants to create and has created. So he'll want that cash for something else.
There's a lot of things to consider here. I mean, I believe in the technology. It's obviously been the cash burn that the bears keep citing as the main catalyst why this stock, might go bankrupt. I just think there's so many other factors.
How much cash does he have, Spence?
And they raised cash fairly easily on that last raise. If we go back, I don't remember when that was, like April or if it was, it was earlier this year. They raised that fairly easily in the 230, 240 area. So I think they could still continue to raise cash. And it's a matter of opinion. I mean, like you said, Spencer, everybody has an opinion on the stock. There doesn't seem to be a middle ground. People love it or they hate it, and that's it. Yeah. I'm just saying the last 5 years, the price has really gone nowhere. If it goes nowhere for the next 2 years, I'm going to make my I'm going to make my 20 points. If it goes 50% south in the next 2 years, I'm going to make my 20 points. If it goes 50% higher in the next 20 years, I'm going to make my 20 points. If it goes bankrupt in the next 2 years, I'm going to lose potentially 100 points.
Wow. Are you also factoring in the debt, long-term debt of the company as well?
Well, that's what, the biggest consideration here is. It's the debt and the cash burn. I mean, but the long-term debt, where are we at, Spencer? Is it $9 billion? What's it at?
I
mean, it's not a lot for a big auto to swallow. I think like a Toyota, or you think like,
it's around 10 billion.
They could swallow that. So it's not improbable to say, well, this debt load is just so high that nobody's ever going to be able to scoop it up. Really, when you put it in perspective, does somebody want to scoop up a $9 billion? Maybe at a certain point in time when you can get the equity very cheap, maybe it makes sense to just swallow the debt. So Nick was on our show yesterday too, and that's all this trade is. It's a call. It's not saying it's a bull call or a bear call. It's a call. It's saying I don't believe the stock's going under.
Where would you go long term?
Box goes down to 80, 70. I'm going to be wrong with that call. Maybe it is going under. But I think if it gets down there in the low hundreds, I think there's going to be some willing buyers.
All right, I want to pause the conversation, take a quick break, and grab today's guest, Kenny Polcari, Managing Principal, Butcher Joseph Asset Management. We'll be right back in a moment here with Kenny.
Watch it because there's still something wrong with my camera. Can you hear me now?
All right, welcome back, everyone. Pre-market prep, Spencer Israel, Dennis Dick, Steve Big Beat, or joined by Kenny Polcari, Managing Principal of Butcher Joseph Asset Management and a CNBC analyst. Kenny, good morning.
Good morning. How are you?
We're doing well. We're doing well, Kenny. You are a longtime floor guy, so I want to start you off with the obvious question. What is the sentiment on the floor right now?
So the sentiment is just as you're seeing. It's kind of it's not nervous. It's not anxiety driven. It's almost kind of this wait and see churning attitude, right? People are they're recognizing earnings coming in. They recognize that the bar is very low. Earnings have been slashed, and so therefore the bar is low. And you've seen that really in all the money center banks. You've also seen the market really not do much of anything. In fact, it's backed off a little bit, even in the face of these better earnings, just because it had rallied ahead. So the market's just churning and digesting. And that's really the sense on the floor, is that there's not this sense of anxiousness or anxiety that something bad's going to happen. It's just the sense that the market's got to catch up with itself. So, they're taking it all in stride.
Kenny, what are your thoughts here on the bank earnings? We just got Bank America here this morning, but we've basically heard from all the big guns here now. It was interesting because, Goldman had a nice beat. It rallied, kind of leaked a little bit. JP Morgan actually traded down their earnings. It came back up. It's interesting. The moves on all these were basically faded in both directions, aside from Wells Fargo. But, they were all decent earnings, and it was interesting that Citigroup actually traded down on its earnings report as well. What were your thoughts on the bank earnings overall?
I think that's exactly right. Look at Bank of America. It's just quoted. I mean, it's quoted right in line, right? So it's not necessarily up or down at the moment. But the fact is, look, the market had rallied to new highs right before we started earnings season. The market was at new highs. The expectation is that earnings are going to be down year over year. The expectation was that, financials maybe were going to come under a little bit of pressure because of rates going lower and all that stuff. So I'm not actually surprised at all because they beat the number. But remember, we just said the numbers have been slashed to the bone. So quite honestly, for any of the ones who don't beat the number this quarter, I think it just speaks volumes to they're really in trouble if you're not going to beat these much lower earnings. So all the earnings, surprise to the upside. Every one of them is beating them by a substantial amount, but yet you're watching the market just kind of churn and digest, which was my point at the very beginning. The market needs to. The market needs to catch up with the action. The valuations need to catch up where the market is. And so to see this kind of lackluster action with the banks, kind of trading, Goldman spiked a little bit the other day and then it sold off. JP Morgan did the same thing and then it sold off, right? But didn't sell off big, but just kind of creating a base and churning a bit. Some of the trader types taking money off the table. It makes perfect sense. And then we see how the rest of the earnings go. So I'm not necessarily surprised. I've been saying that for a while, that we should expect the market to be in this 29.75 kind of 30.25 range during earnings season. I don't think there's any necessarily huge reason to go out and really take them. You still got the Fed, which is 2 weeks away, and even though everyone thinks they're going to cut, there's still the very real possibility that they could change their mind if the macro data continues to come in strong. Look at retail sales yesterday, much stronger than expected. Look at the data last week when he was talking. The eco data last week when he was talking was not weak data. In fact, it was in line to a bit stronger. And so you start to question yourself, saying, well, if the data is really stronger, it's not aligning with his conversation about being concerned about the weaker U.S. economy. It's not making a lot of sense. So even though I still think they will cut, there is the possibility that they don't. And if they don't, then I think you see a swifter reaction in the market.
And that's going to affect the utilities. That's going to affect obviously the bonds. And you look at the TLT here. The TLT has come off here the last few days here. Utilities, or last week or so, utilities just kind of hanging out here. But if they do, get to a point where they get to a neutral stance here, what does that mean for the bonds? What does that mean for, the stocks that trade like bonds?
So when you say, do they get to a neutral stance, do you mean that they don't cut in July? Because that would be.
I think they're going to cut in July. I just mean, maybe they cut and maybe they, get a little bit, not so dovish.
Right. So, well, I'm not sure they can get any more dovish. I think he was actually fairly dovish last week when he was talking about, he reiterated it a number of times, his ability to cut rates, and he really set the market up for that rate cut to come. So I'm not necessarily sure he can get more dovish. And by the way, if he gets much more dovish, what's that really say about the thinking at the Fed about the U.S. economy versus what they're telling us versus what they really think? Because if the data continues to be quote unquote neutral to strong, which it appears to be, and then he's cut rates by 50 basis points, which I don't think is going to happen. I think it's going to be 25. But it is interesting. Yesterday, they had a bunch of people all over television calling for a 50 basis point rate cut because they might as well just go there because that's where it's going to end up anyway, which, again, I don't agree with, but one way or the other. Then I think the market's okay, right? Because the market's already priced it in. The market is priced in at least 25 basis points. And so, therefore, I don't think the market's necessarily going to run away when they do it. But I think it'll just help. It'll help build a foundation right here and set the market up for an advance in the second half of the year.
Let's go back to the earnings parade here. We got CSX last night, and they actually disappointed. Stock is trading down now 1% here in the pre-market. Some of the other rails are down in sympathy. Norfolk Southern is trading down $7 or $6 here this morning. UNP's down $4. I mean, you've got the Dow Theory, people saying that transports have not been participating, or they're not up obviously as much as this overall market, and that's why they're skeptical of the rally here. We saw JB Hunt report pretty good earnings, and that would have helped, but the CSX is now hurting that that theory there. What are your thoughts here first on the weak CSX earnings, and then what that means for the overall market?
So it goes to my point, right? Because CSX they missed the number and they're getting punished significantly, right? Down 7% here in the pre-market. So, and that is going to play right into that whole transportation theory. And last week I actually made mention in my note that even though the S&P was making a new high and the Dow was making, teasing a new high, and the NASDAQ was making a new high, the Dow transports by no means were participating in this. And if you were a believer in Dow theory, that should have been a caution signal, because as the other indices are making new highs, the Dow transport is not. And so therefore there's a conflict there. And so CSX kind of confirms that, right? Now the other rails are getting dragged down with it, because there's going to be this suggestion or this idea that the other ones are going to be weak as well. That would go right into that Dow theory, which would mean you should be cautious up here, which is what I've been saying. I don't think there's any reason for the market to run away. I think you have to now let this happen. We're now just at the front end of earnings season. We've got 2.5 weeks to go. There's going to be lots of numbers coming out. Certainly the transports are going to be key in terms of the Dow theory. So I think as a long-term investor, you can afford to be patient. As a trader type, someone that's jumping in every day, you love the noise, you love the excitement, because that's how you make money as a trader. But as an investor, I think you can sit back for a minute and be patient, because you'll get your opportunity.
Hey, Kenny, this is Big Beat. How are you today?
I'm good. How are you?
Good. So I am a believer of Dow theory, obviously, and I would be questioning, the question is, what company or what sector would you actually be looking for in the earnings that would help propel the Dow theory here?
Well, you'd have to, the Dow theory is all about transports versus the Dow industrials, right? So they both have to be moving in unison. And so the issue with the Dow transports now, if you start to see weakness in the Dow transports, then the theory is not going to work, because the transports won't be supporting the industrials, correct?
Correct.
So therefore, you have to, in my opinion, now, especially now after the CSX number, you're going to have to wait and see how the other numbers. Is this just a one-off with CSX? Are the other ones going to really offset this? And then is the transport's going to then stabilize? I'm not so sure that's the case. I actually think you're going to see some broader weakness in some of the transport stocks, which is why I say you can afford to be patient, right? But from your perspective, as an individual name, we're in the middle of earnings season, so at the moment I can't talk about individual names without violating compliance or regulatory rules. But I will just say I think you have to be careful and watch as we move through the season what the other transport names are going to report, because that's going to then point you in the direction of Dow theory and where the industrials might be, and then where the market's going to go from there. And I actually think the next move is a little bit lower. I don't think it's a fallout, but I do think the broader market's going to turn lower.
If I could play devil's advocate here, and we're getting some questions about this or comments about it from our chat. Dow theory was, back in the day, transports ruled the economy, but now that the technology is the largest sector of the economy and everything is tech-based, not that Dow theory isn't a thing, but should we be focusing it as much as we haven't talked about Dow theory on the show? I don't think maybe ever. So this is the first time it's come up. But should Dow theory still be as big a thing in today's economy?
Well, listen, I think that's a great question, actually, because whoever's asking it is absolutely correct. So much of this economy is driven by technology. Maybe Dow theory becomes irrelevant. Now, I'm not so sure yet it's become irrelevant, because Dow theory, when you talk about transportation stocks, you really talk about moving goods around the world. Technology doesn't move goods around the world. Transportation does, right? Physical goods, whether it's shipping, whether it's rails, whether it's airplanes, that moves goods around the world. And so therefore, I still think it's relevant. But that is a very interesting question, because technology plays such a a larger role in the global economy, not just use the global economy, is that you could make an argument that, it's irrelevant. But I'm still of the old school. Part of that may be my training and my age, that I still think Dow Theory is important. And I still think transportation of goods around the world is significant. And so therefore Dow Theory to me is still something, at least for now, I look at. Maybe 5 years from now, I won't, but right now I still think it's relevant.
Right. So yeah, we're still relevant. It's just a question of how much. Kenny, before we let you run, do you have like a year-end target on your mind?
Yeah. So I actually think the market's going to close somewhere. I'm thinking 30, 25, 30, 50 is probably where we're going to see the market trade. I think we might back off a little bit here. I think the second half of the year is going to be stronger, but I don't necessarily think I think that's going to be where it is. The market's already up. The S&P is already up nearly 20%. The Nasdaq's up almost 25%, which I think is much better than most people expected. So I think you'll see some volatility going into the fall, but then I think you'll see it rally right back into this range by year end.
And I can't let you go without asking, what is on the menu today?
So I'm just about to send that note out. So I'm sending you butter-bathed, pan-seared ribeye. It's delicious. Wait till you get the recipe. It's I got to just wait for compliance to give me the okay.
All right. Yeah. I mean, there's a lot of good stuff in Kenny's notes. I'm not saying there's not, but that may be one of the best parts of Kenny's notes right there. So Kenny Polcari has been on with us. He is the managing principal of Butcher Joseph Asset Management. You can see him on CNBC. Kenny Polcari, thanks so much for the time today, and have a great rest of your week.
You as well. Thank you.
All right. Have a good one. All right. 8:50 here, Dennis. Well, things just quiet out there.
Very quiet. I mean, the S&Ps are just sitting here doing nothing. You have a mixed market here this morning. We are seeing strength. A little bit of the TLT, which typically makes the banks weaker. Obviously, Bank of America earnings are going to be more of a factor than anything, though. Bank of America is slightly leaking on its report, and you got most of the banks trading lower there. CSX is putting a real damper on, obviously, the transports and the rail specifically because they were very weak here this morning. Oil is just hanging out. We're up a couple cents on the USO. It's very quiet there, too. It's mixed. Obviously, we've had a few good reports here as well this morning, so you do have a few sectors that are trying to go higher here, but overall, very quiet market.
Steve, same thing that you're seeing?
Yep, quiet market.
Quiet out there?
Yep, flat market. Probably see a little bit of a pullback this afternoon.
We can get into some movers, though, and I just want to talk the Roku move yesterday because, holy cow, the strong get stronger, the weak get weaker. I mean, this stock has been an absolute monster, one of the best, if not the best performers of 2019. Started the year around $30, is now $112. I mean, this is a cord-cutting play. Evaluation has always been an issue for me, which is why I don't have it in the long-term portfolio. But as a trade, I mean, this thing just continues to perform. Here it is trading up in the pre-market again this morning. We saw this yesterday. It was trading slightly up in the pre-market and then blasted off to the tune of 8 more points. I mean, the stock's making new all-time highs. I never like to be short stocks making new all-time highs. I'm not sure what derails this, if it's going to take some analyst commentary or what it is, but this stock, the wind just remains in its sails.
I'll say what I said yesterday. I wouldn't put real money in a company that has to compete directly with Amazon and Apple, which they are. But I am a consumer. I'm a user of Roku, and I like the product. Steve, do you use it? Do you have an opinion on? I mean, this move is ridiculous.
I literally have a Roku in every house I own. So yes, I use it, but I haven't bought one in a while, so that makes me a little nervous.
Exactly.
Hey.
There we go, right there. I haven't bought one in a while either.
And,
I'm not calling the top on this thing, though. I've lost a lot of money trying to call tops.
Absolutely. It's a cult stock, I think. But, we all use a Roku. I think it just is so well built that we don't need a second one or a third one anymore.
Yeah, that might be it.
Incredible market performer, though.
Yeah, I think one of the best performing large caps. Well, I guess it's a large cap now of the year. Yeah, just an absolute beast. And I forget what Laura Martin was the analyst at Needham. She had, I think, the street high price target, and that just got blown through. I think it was like in the 80s or something. And so that was a long way ago at this point. But Roku.
We didn't talk this beverage headline from the UK.
Let's talk about it. The UK Health Secretary has proposed a ban on the sale of energy drinks to anyone under the age of 16. This seems like a direct shot at Red Bull and Monster.
I mean, and you put this in perspective, it's the UK. It's not like, and then the other perspective of it is that okay, under 16. I don't know how many consumers, how much of their market is under 16. I'd imagine it's not the bulk of their market. It could be a chunk though. They are a hitting monster on this news this morning. The stock is trading down 2% here in the pre-market, 64.50. But I'm not sure this is like a headline that I'm like, oh, this is real bad news. I mean, the stock has been trending up. It's had a pretty good year here. I'm almost more inclined to buy the dip on Monster. What do you take? Do you do any of these energy drinks? You take any of these energy drinks there? Big beat, give you some energy.
I do not. I was just in the gas station yesterday looking at energy drinks, and I went, ugh.
Too much sugar, too much caffeine.
It really does seem. I don't have any numbers to back this up, but it really does seem that the most of their consumer base is young people, and specifically.
You think it's people under 16 though?
Teenagers and college kids.
I think college.
I would think it's like the college.
Stay up for that long-term exam.
Yeah, I don't know.
If they said under 19, I'd be concerned. Under 16 though, I can't see like a lot. You're still in your parents' control. I don't know if my kids, I wouldn't have them, getting pumped up on Monster beverage. I mean, yeah, they're in high school. They can get what they want. Maybe they get some high school kids that are buying them, but I just can't see this thing, all of a sudden knocking the revenue down, 5-10% here. I don't think that's happening. Stock's down 2% on this headline. I think it's a buy.
All right.
Pullback.
We didn't even get to ratings yet today.
But I don't know if I'm buying the first day.
Okay, we didn't even get to ratings today. A lot of ratings to note. Credit Suisse has a note out on some Chinese internet names. They are upgrading Ctrip.com to outperform, and they are downgrading. I had it up here. Just lost it. Who are they downgrading here? Credit Suisse downgrading Weibo to neutral, and 58.com WUBA is a symbol to neutral. So we Credit Suisse with the pair trade on some Chinese names. Goldman Sachs must not wear jeans because they're downgrading Levi Strauss. They're downgrading Levi Strauss, Ralph Lauren, and PVH all to sell this morning. So across the board, I guess Goldman hates jeans. Let's talk about Levi here.
I mean, Levi's been in the gutter. I dissed it on the day after earnings when it was 21.5, and I thought it was going lower. I've been right on that one. It's down 19.33. You got that May low. That might be the first bounce area, 18.92. Maybe that's the first bounce area there. But, the P is reasonable here on LEVI, but I just don't think this had a lot of buzz right coming out of being the IPO there. And really, when you look at it, is it a growth industry? I don't think so. So let's see what it does at 19. I think it's going to test the 19 area. Maybe it bounces there. I think the easy money's been made on the short side, though. So I'm not sure I'm coming in here shorting it. Ralph Lauren now is a different story. His stock was going straight up yesterday, and this is a little bit of a contrarian call. It's a stock that's meandered for the last couple of years here, too. So, and then you got PVH also getting downgraded, too. I was trying to look at all these charts. This stock's been trending down. So PVH is actually going to take out its low of the move potentially here this morning on this, and that's concerning as well. But, you see how poorly the big department stores have done. You start thinking, okay, is it the apparel that is eventually going to start to take a hit too? Potentially. And maybe that's what the Goldman call is here. So I just don't like retail at all.
The jet set used to have Levi's and wear the pony on the shirt. I think the Ralph Lauren is falling out of favor. I used to wear Levi's every day, and I still wear jeans almost every day and shorts. But I know.
What kind of jeans do you wear?
Lucky brand, and I wear
Lucky. I got Lucky.
I used to wear those.
They fit good.
Oh man,
expensive though.
Bring me back to high school. I used to wear those $80 jeans. Ridiculous.
Yeah. But yeah.
Also this morning, we have KB Home getting an upgrade from Evercore.
Yeah.
We have ConocoPhillips upgrade at Bank America. Redfin upgrade at Susquehanna. And a pot note, you don't see these too often. It is a smaller firm, Ladenburg. They're issuing coverage on some pot names. Canopy Growth with a buy. Aurora with a buy. Tilray with a neutral. Acreage with a buy. So not a big firm, but there's not a ton of coverage on these names, so any sort of new initiation is notable.
And you're getting a lift here. They had the washout low there 3 days ago. Stocks have been out of favor. Sector continues to be out of favor. So you're getting a dead cat bounce here right now, in my opinion. I think you get anywhere up CGC. Maybe you can eventually get
dead cat bounce in an emerging industry.
But I've said I think the story's over. I'm a seller of bounces here. If I actually was in these stocks, I'd be using the strength of the last couple of days to lighten up. So because I think the story is, I think competition's coming. I mean, we had Alan Brockstein on. We talked about the contracts, and yes, it's still, we've got legalization. You were giving me the argument, coming from other states potentially as well. But it's full legal in Canada here now. Licenses went from 30 to over 200, I believe here now. Competition's coming for all these stocks. They're trading with nosebleed valuations. So I think the story is over. I think rallies are to be sold in the majority of these pot stocks. I think CGC gets up to 40. I think it's a gift.
Dennis, we're gonna have to get you to our cannabis event next month in Detroit.
Maybe it changed my opinion. I was bullish. I was in some of these pot stocks. I was bullish for a while. ACP, I wrote that up, and actually I was a little late getting out of the last of it. But in I just think, I don't know. I think the easy money's been made. It was this whole anticipation of the legalization in Canada that was driving it for a while, the anticipation of more legalization across the states. And I mean, that still is coming. But again, I think, there's a lot, private industry is going to be coming in here too now, with competition. So I just can't bring myself to pay PE of 70, 80, or 100, or paying, you have to, some of these don't make companies, so you got to look at the sales and, paying, ridiculous multiples for companies that are going to be having a lot of competition. So I'm not a fan.
All right, Dennis, mark your calendar, August 15th, Benzinga Cannabis.
You want to get me out there?
It's in Detroit. You don't got to go very far. August 15th, come talk, hang out with us and learn about cannabis.
Okay.
And you can maybe you'll change your mind.
Let's do it.
Any final thoughts from either of you as we wrap up today's show? Steve, any final thoughts?
I just say be careful out there. I think tops are starting to come in.
Tops starting to come in. All right, Dennis, any final thoughts?
It's mixed. Obviously, the rails are disappointing. That's going to be the theme here today. Like Kenny said, the Dow theorists are going to be applauding this move, saying, "We told you so." And obviously, there's something to that with CSX trading down 7% here. I kind of agree with Spencer, and I kind of agree with your point here too. I don't think Dow theory applies as much as it does in 2019 as it did 50 years ago. So with the way technology is, I think there's other indicators that you could use. So, CSX is going to not help the market here this morning. But look, it's not really hurt the market here either. I mean, it's not like, whoa, the Dow theorists are right, let's sell the S&Ps off. We're flat on the S&Ps. So that's an argument against Dow theory to a certain extent. The CSX can fall 7% and the S&P can completely ignore it. So there's an argument there to be made too. So it's a very important day for the market, though. Can it hold up on disappointing CSX? We're going to get Netflix tonight. We're going to get IBM tonight. We're going to get eBay tonight. We're going to get URI tonight and Alcoa. So we're starting to get into the meat of the earnings season. We're behind the bank earnings. And now we're going to get into some of these technology stocks. I believe Microsoft reporting later in the week here as well. So it's going to be an interesting week here for earnings.
All right, Dennis, don't forget, buy Disney today. I've reminded you. It's the third day in a row I'm reminding you.
It's up a little bit here in the pre-market.
You told me to remind you the day before the next.
Okay, so tomorrow is the preview of The Lion King, or what is it?
Yeah, tomorrow is the premiere. You said I'll buy the day before. That will make that today. So today's I'm
supposed to take Disney home.
This is the last time I'm reminding you, take Disney home. You said it, not me.
I wrote it down. DIS.
Okay.
This is the Spencer Israel trade. We'll see how it works.
This is you said it. I'm just reminding you of your own trade. So that'll be it for today's show. Thanks to Kenny Polcari. Thanks very much to Steve Big Beat Orr for joining us today. If you missed any part of our show, catch our show podcast anywhere you get your podcasts: iTunes, SoundCloud, Stitcher, Google, wherever, Spotify. Please remember, all the information on our show is meant for informational purposes only, not meant to be investing or trading advice. And that's it. Have a good one, folks. We'll see you on Thursday.